Let's take a look at your market news now. Asian markets started the week on a positive note as investors take their lead from a healthy Wall Street. The advances helped in recovering from the big losses suffered at the beginning of the month. However, analysts warn that equity valuations remain elevated and volatility could return. This week will be a busy one with the release of key U.S. data, including economic growth, job creation and wages. The Nikkei climbing 1.2%. In Hong Kong, the Hang Seng 0.7% firmer and the Shanghai Composite Index advancing 1.2%. U.S. stocks rallied on Friday, lifted by gains in technology stocks and a retreat in Treasury yields. This as the Federal Reserve eased concerns about the path of interest rate hikes this year. The Dow Jones Industrial Average rose 1.4%. The S&P 500 gained 1.61% and the Nasdaq Composite Index added 1.77%. For more on the markets, we cross to Nompumelelo Siziba. She's at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. Over to you.
Thanks very much, Nzinga. Yes, well, the all-share index is also in positive territory, following in line with global markets doing very nicely. Resources counters doing quite nicely indeed. We see the oil price elevated above $67 a barrel. So it's some possible inflationary pressures there. There were reports last week that inventories in the United States had gone down, and that helped to support the oil price. And of course, Sasol has come out with its interim results. Quite good. Headline earnings per share up 17%, pardon me. And they've given shareholders a dividend of R5 a share. Let's take a look at the indicators. Well, I'm joined by the effervescent Bright Khumalo. He's from Vestat. Thanks for joining us, sir, as always.
It's lovely to be here, Nompu.
Let's get straight into local factors because of time constraints. Last week, we had the budget. And, of course, Nzinga's just spoken to the minister. I want to get your view on what you saw as the pros and the cons and whether enough has been said and done to avert us from further downgrades.
Yes, I think we'll just talk about the quick wins. The estate duty above 30 million rands, those estates are going to get taxed at 25%. We saw the fuel levy about 22 cents and a further, I think, about 32 cents to come as well. Those two are very easy because, you know, they don't tax. They're not a big of a burden to the, you know, the lower LSMs, you know, 4-1. Or I guess 4-0 as well. And if you look at I think the one of the cons, or what still you know, an argued point when it comes to the budget, was the VAT 1% increase, which is actually 7% increase if you look at, you know, the pure numbers. That will hurt quite a lot of people in the 1 to 4 LSM, but it's an easy win still for the government because they'll be able to raise about 26 billion rands just from that 1% increase. So I don't know. I don't want to be, you know, delve too much into the argument of where I stand, but yeah, it is what it is right now.
But in terms of a credit rating downgrade, Moody's is going to make a decision next month, and of course, one of the key things was SOEs. Did you get a sense that there was enough clarity about the strategy of SOEs?
I'm not quite sure. You know, let's not get into that slippery slope right now. Let's cross that bridge when we get there, because, you know, we've got the stronger rand where it is today. It means inflation will be lower. You know, and, you know, it could potentially, you know, help South African companies invest more locally, but it could mean also that returns from, you know, investing in South Africa might be lower because, you know, where's the growth going to come from? It's not going to be as fast as we expect. There's lots of moving parts in that argument.
All right. Okay.
Yeah.
Well, let's move on to Sasol. As I mentioned at the top, coming out with results, headline earnings per share up 17%, and this is in relation to their 6 months to the end of December. Yes. They did quite well on the back of a higher oil price, but also other factors. Your thoughts on this stock?
Yes, I mean, what's interesting, that something that stood out for me is the fact that the liquid fuel sales were actually down 3%, and the biggest contributor to that down was the net ref refinery, which actually saw volumes plunged by 21%. But on the contra of that, we saw margins actually strengthened by 16%. So I wonder what happened there. Is it just the local South African economy, or we're not using enough fuel, or maybe us millennials who don't want to buy cars contributing to this? But I always say there's a substitution effect there. If I'm not buying a car, I'm using an Uber, so an Uber still uses fuel, you know, unless we're flying in helicopters that don't, you know, that use electricity.
Well, I happened to speak to the CEO earlier, one of them, and he explained that the reason for that was because there wasn't as much demand in the local economy in the festive season as they had anticipated. So that's part of the reason for the lack of consumption there. But in terms of this Inzalo share scheme that they had, the BEE scheme, that cost them a lot of money. The shareholders were not hit, the black shareholders, but Sasol has taken a hit on it.
Yes.
And people seem to be very worried because they've had to go into debt to impair that particular thing.
Correct. Remember, they had two options. They had the option of actually issuing new shares, meaning the current ordinary shareholders get diluted. And we saw the top two shareholders were not happy with that, so that got bounced off very quickly before it even came to market. And then on the other hand, it was, you know, other options. What other options are really there? It's either you raise debt, or, you know, it just depends on what kind of debt. And at the time, they actually had a good credit record, and, you know, it's meaning they could actually raise this debt in lower interests compared to a normal company. So that's been good for them. And I actually liked what one of the CEOs, like you said. This year, the two big things that they're looking at is, number one, that Louisiana project in Lake Charles, and the new PE scheme, the Kanyisa scheme. So that's also, you know, those are the two big milestones. And like I said, the Lake Charles project is 81% complete, meaning sometime this year they'll actually start operating there, and they're already seeing about 0.5% in terms of returns because of the taxes there being favorable at current the regime of Trump.
That's right. That's right. Well, we're going to leave it there. Thanks very much, Bright, as always, for your time. And Sasol also basically expecting to complete that project, the Lake Charles project, later this year. And of course, with the US economy, thundering on all cylinders, it should mean that they're going to have pretty good sales and good revenues. And if you're plugged in and actually a shareholder in Sasol, it means we should do quite nicely.